All right, so you've sent over a bunch of stuff, research reports and articles.
Yeah.
We've even got some personal notes here.
Yeah.
It looks like you've got a big meeting coming up
Mm-hmm.
with some pretty important people in the private equity world, and you really want to be ready. Want to go in there feeling confident,
Yeah.
you know, what's going on.
For sure.
And that's what we're going to do today. We're going to do a deep dive into private equity, what's happening right now and where things might be headed.
Yeah, you're really jumping in at a really interesting time. Like things are changing. We're seeing, some things bouncing back, but there are also some big challenges, that are changing how the whole industry works.
Yeah.
That Bain& Company Global Private Equity Report for 2025 that you sent over, that's a great place to start.
That's exactly what I was thinking. So let's
Yeah.
jump right in. The report kind of gives us a mixed bag for 2024.
Yeah.
On the one hand, investments and exits are way up. A huge 37% jump in deal value
Wow.
and a 34% rise in exits.
Yeah.
This is pretty good, right?
It does on the surface, but when you dig a little deeper, you see that fundraising actually went down in 2024, dropped by 23%.
Mm.
So there are deals happening, but less money is going into those new funds.
So that's interesting. Why would fundraising go down when there are all these deals happening?
Well, this is where liquidity comes in. It's really important.
Yeah.
It's not just about having cash. It's about how easy it is for investors to get their money out.
Right.
And remember, private equity is all about making money for investors. They put money into a fund.
That's right.
The fund invests in companies. Hopefully those companies grow and improve, and then they're sold, which makes money for the investors.
Yeah.
But what happens when those exits slow down or don't make as much profit?
It seems like things would get kind of stuck. Investors wouldn't want to put more money in if they're not seeing good returns coming back out.
Exactly. And the report says that while exit activity did increase in 2024, that proportion of distributions relative to NAV, that's net asset value,
Right.
it fell to just 11%. And that's the lowest it's been in over a decade. This makes investors pretty nervous.
So this liquidity crunch, this is the big deal, but what does it actually mean for me? I'm getting ready for this meeting.
Well, first, it shows this growing gap between the haves and the have-nots in the industry. You see, the report found that the top funds, the ones with a really good track record and lots of access to capital, they increased their fund size by a huge 53%.
Wow.
Meanwhile, the funds at the bottom, they saw almost no growth at all.
So going into this meeting, I need to figure out, are these people the haves or the have-nots?
Exactly. You've got to understand where they stand in the market, how they're dealing with this liquidity problem, and what their track record is like.
So their history, basically.
Yeah, you might even want to look into how they're using other liquidity strategies, like selling minority stakes, dividend recaps, or using secondaries, especially continuation funds.
Okay.
These are all ways to try and generate some liquidity without having to do full exits.
So it's like they're buying themselves some time in a tight market.
Yeah, that's a good way to put it.
Okay, so we've talked about the overall state of things, and it's definitely more complicated than just looking at deal volume.
Right.
But the report also looks at specific sectors. Let's talk about software that's usually been a really good area for private equity.
Yeah, software has been a favorite, but the report shows some problems.
Okay.
While software buyouts were expected to improve margins by a median of 560 basis points over 5 years, the reality was very different.
Really?
They looked at 33 software buyouts, and the actual margin growth was way less than projected.
So what's causing this underperformance?
Well, it's a few things. There's pressure on IT budgets across the board,
Right.
which impacts how much companies spend on software. And at the same time, competition for those good software deals is still really fierce, which keeps valuations high even as interest rates go up.
So it sounds like the easy money days in software might be over.
Yeah, that's a good way to think about it.
So what should I be looking for in terms of how these funds are approaching this sector?
Don't just take their word for it when they promise revenue growth.
Okay.
Look for firms that are focused on being efficient and making their products stand out. Those are the keys to making margins bigger in this environment. You want to see that they're actually improving the software companies they buy, not just bidding them at high prices and hoping for the best.
So it's not just about the money, it's about having the skills to run the business well.
Exactly.
That makes sense. Now let's switch gears to another interesting thing. The report talks about carve-outs.
Yeah, carve-outs, that's when a private equity firm buys a part of a bigger company.
Right.
Those have also usually done really well. Before 2012, they had a 3.0x multiple on invested capital.
Wow.
MOIC compared to the 1.8x average for regular buyouts.
So they were doing a lot better.
Yeah, but things have changed. Since 2012, carve-out MOIC has dropped to just 1.5x.
So now they're about the same as a regular buyout.
Pretty much so. Why the drop?
Yeah, why is that?
Competition is a big part of it.
Yeah.
More firms are going after carve-out deals, which drives up prices and makes it harder to get those amazing returns we saw before. But there's another important thing, operational improvement or the lack of it.
So you're saying it's not enough to just buy the carved out business. You need to be able to make it work better to actually increase its value.
Exactly. Before 2012, sponsors were able to increase the value of their carve-outs a lot by boosting both revenue and margins, like we're talking 31% and 29% improvement.
That's huge.
Yeah, but since 2012, those numbers have shrunk a lot down to 17% for revenue improvement and a tiny 2% for margin expansion.
So the game has changed. What should I be asking about their carve-out strategy in this meeting?
First, you've got to understand how they decide which carve-out opportunities to go after.
Okay.
Are they just looking at the numbers, or are they really digging into how the business works?
Right.
Second, what's their track record? Have they been successful at integrating and improving carved-out businesses?
Right.
Or are they just buying and hoping for the best?
Fingers crossed.
And finally, how are they handling the leadership and talent side of carve-outs?
Okay.
This is often overlooked, but it's really important for a smooth transition.
So when it comes to carve-outs, I need to look past the numbers and see if they actually know how to run a business and handle the people side of things.
Absolutely. It's about understanding the whole picture, not just the financials.
Right.
And this actually connects to a bigger shift that's happening across private equity, something you should definitely be aware of in your meeting.
Okay, what is it?
Historically, private equity firms haven't been super focused on strategy. Their plan was pretty basic. Find a good company, buy it, make it better, sell it.
Yeah.
But that way of doing things is being challenged now.
So what's pushing them to be more strategic?
Well, one thing is fees.
Yeah.
That traditional 2 and 20 fee structure.
Right.
It's under pressure now. Firms have to find new ways to make money and prove their fees are worth it.
That makes sense.
And then there's the rise of retail investors. They want more sophisticated products and services. And they're also putting pressure on fees.
Yeah, I can see that.
And of course, we can't forget about the competition. It's getting harder and harder to find good deals and to get capital.
Yeah, for sure.
So to stand out in a crowded market, firms need to offer something unique.
Right.
It's not enough to just be a private equity firm anymore.
So they need a clear vision, a specific area of expertise, and a unique approach that sets them apart.
Exactly.
So going into this meeting, I need to understand not just their current portfolio and track record,
Right.
but also their long-term strategy for success in this changing world.
You want to know how they're thinking about the future, how they're adapting to these changes, and how they're different from everyone else, because the game is changing.
For sure.
And those who don't adapt are going to be left behind.
Now, speaking of adapting to change, let's talk about something everyone's thinking about these days, generative AI.
It's the hot topic right now, and for good reason. It's already having a real impact. In a recent survey, private equity investors said that most of their portfolio companies are already trying out or developing Gen AI solutions.
Wow.
And what's really interesting is that almost 20% have already seen real results.
That's amazing for such a new technology.
Yeah.
So it's not just hype, it's happening right now.
Exactly.
So how are private equity firms actually using AI?
Well, the report talks about a few different ways. Some firms like Vista Equity Partners are going all in. They're investing a lot in AI themselves and pushing their portfolio companies to use AI everywhere.
Well.
Others like Apollo Global Management are taking a more centralized approach.
Yep.
They've created a center of excellence that's like a hub for AI knowledge and expertise.
Interesting.
They provide resources and guidance to their portfolio companies.
So they're helping them figure out how to use it.
Yeah, and then there are firms like HG, which are using their specialized focus to encourage their portfolio companies to work together and share knowledge. They're finding that AI solutions that work for one company can often be adapted and used by others in their portfolio.
So there's no one right way to do it, but
No.
it's clear that AI isn't some future thing anymore. It's happening now, and it's already changing private equity.
You got it.
And I need to understand how these firms are dealing with it.
Absolutely. When you go into that meeting, make sure to ask about their AI strategy,
Okay.
their investments, and their vision for how this technology will change their business and the value they deliver to their investors.
This has been really helpful, and I'm already feeling a lot more prepared for this meeting.
Good.
We've covered so much from the overall market trends to specific sectors and the impact of new technology.
Yeah, it's a lot to take in.
But before we send you off to conquer that meeting, Let's take a quick break to go over the key takeaways
Right.
and give you some specific questions to ask. We'll be right back.
Welcome back. You're about to head into this meeting knowing so much about what's going on in private equity right now.
Yeah, I'm feeling a lot more prepared already.
Yeah. Good. Let's really focus in on those key insights and get you ready with some really good questions to ask.
Sounds good.
You said earlier that 2024 was like a partial exhale for the industry.
Right.
Investments and exits were up, but fundraising was down, and liquidity is a big worry. This
Yeah.
isn't just theory. This is what these firms are dealing with every single day.
Yeah, for sure.
And this is your chance to cut through all the BS and get to the heart of their strategy. Don't be afraid to ask direct questions like,
Okay.
what are you actually doing to deal with these liquidity problems? And how are you making sure your investors are getting consistent returns?
That's a great question. Gets right to the point. What about specific sectors like software? We talk
Mhm.
about how margins are under pressure. How can I dig deeper there?
You could ask, given the pressure on software margins, how are you deciding which companies to buy and how are you making sure they grow profitably?
I like that it's not just about revenue. It's about how they create value now. About carve-outs, it sounds like. Knowing how to run a business is really important. What's a good question to see if they can actually do that?
Try this. What are your criteria for evaluating potential carve-out opportunities, and how do you make sure the integration goes smoothly and the business actually improves after you acquire it?
I'm seeing a pattern here. It's not just about the deal. It's about what they do after they buy the company.
Exactly. You're getting it now. Let's not forget about that bigger strategic shift we discussed.
Right,
Are they just going with the flow, or are they actually planning for the future?
right. I need to understand their vision and what makes them different. How about this question? How are you making your firm stand out in this crowded market? And what's your long-term plan for adapting to the changing private equity world?
That's a really good one. It makes them explain their vision and show that they're thinking strategically.
Hmm.
Some people think that the rise of retail investors is actually good for liquidity.
That's an interesting point. It seems kind of counterintuitive given the liquidity crunch we're seeing. But it's worth thinking about. Do you think their strategy for attracting retail investors could help balance out some of the challenges they're facing with traditional institutional investors?
It's definitely possible retail investors could bring in a whole new source of capital,
Right.
but they also have different expectations and needs. It'll be interesting to see how firms manage that. Speaking of managing things, we can't forget about Gen AI. It's not just a buzzword, it's already making a difference. What's a good way to see how they're approaching AI?
How about this? How are you using generative AI and other new technologies in your investment strategy and operations? And what impact do you think these technologies will have on your portfolio companies and your overall performance?
Excellent. By asking these questions, you're not just getting information, you're showing them that you understand the industry and you're thinking critically about the future.
While I get the appeal of those other liquidity strategies like minority stake sales and dividend recaps, aren't they just delaying the inevitable?
That's a valid concern. Those strategies can buy some time,
Yeah.
but they don't fix the root problem of finding buyers for mature assets. It's like
Yeah.
putting a Band-Aid on a broken bone. It might help a little, but you still have to fix the bone.
So asking about their long-term strategy is even more important.
Mhm.
It's not just about surviving right now. It's about having a vision for how they'll succeed in the future.
Okay.
Now, let's move beyond the prepared questions and talk about some bigger trends that might not be directly addressed in the reports you shared.
I like where you're going with this. We've talked about private and public markets coming together, the rise of retail investors, and how technology is changing everything.
Hmm.
All these things are pushing private equity into a new era where the old rules don't apply anymore, and the idea of what an alternative investment is changing.
Yeah, it's not just about understanding what's happening now. It's about figuring out what will happen next and what role these firms will play.
Maybe you could ask, what will the private equity world look like in 5, 10, or even 20 years? How will these trends change the industry, and what part will your firm play in this new ecosystem?
That's a really thought-provoking question.
Yeah.
It goes beyond the immediate worries and challenges to their long-term vision and their ability to adapt.
And remember, this meeting is a two-way street.
Right.
They're checking you out just as much as you're checking them out.
Right.
By asking smart questions and having a thoughtful conversation, you're showing them your knowledge, your analytical skills, and your strategic thinking.
And by considering these bigger trends, I'm showing them that I'm not just looking for a quick buck, but a partner who can play the long game.
Exactly.
I'm feeling a lot more confident about this meeting. All the things we've talked about have given me a much deeper understanding of the industry and a way to evaluate these firms beyond just their financial performance.
That's what we want. We want you to walk into that room feeling informed and empowered. Remember, the future of private equity isn't being decided in some boardroom. It's being shaped by innovation disruption and what investors want, which is always changing.
And by asking these questions, I'm not just getting ready for a meeting. I'm getting ready for the future of finance. I think that's a great place to wrap up this part of our deep dive.
Yeah, we've covered a lot, but there's always more to learn. Let's take a moment to think about everything, and then we'll come back with a final thought that will really get you thinking.
You know, we've talked a lot about the trends and the strategies and the technology changing private equity.
Right.
But there's one thing we haven't really talked about, the human side of things.
That's a really good point. We often get so focused on the numbers and the deals that we forget private equity is really about people. It's people making the decisions, running the companies, and creating the value.
It's easy to forget that, but the people involved can really make or break a deal, especially with carve-outs. Separating a business from a bigger company isn't just about the money. It's a really complicated process for the people.
Absolutely. You're basically creating a whole new company.
Right.
Often with its own culture, its own systems, its own leaders.
Yeah.
The Bain report talks about some important things to consider here, like making quick decisions about leadership is really crucial.
So it's not just about buying the assets. It's about looking at the current leaders.
Right.
And deciding if they have what it takes to lead this new independent company.
Exactly. Do they have that entrepreneurial spirit? Can they make tough decisions? Are they flexible enough to handle a fast-changing environment? A lot of times, the answer is no.
Yeah.
And the sponsors need to figure out those key roles and find the right people to fill them fast.
And it's not just about the top executives. It's about building a whole team from the bottom to the top that's on board with the new vision and can make it happen.
Yeah.
I imagine that could be pretty tough, especially for employees who are used to the structure and stability of a big corporation.
Yeah. Change management is super important in carve-outs, but people often underestimate it. You're essentially building a startup, even if it's a huge one.
Yeah.
There's a new culture to build new processes, to put in place a whole new way of doing things.
Right.
That can be scary for employees who don't like change or are worried about what will happen to them.
So how can firms make this transition easier?
The good sponsors, the ones who get it, they recognize the human side of things and they invest in change management right from the start.
Okay.
They're open with employees. They explain what's happening and what the future looks like. They give employees the power to take charge and contribute to the new company's success, and they provide training and support to help everyone adapt.
So it's about turning that disruption into something positive.
Exactly.
Using the team's energy and excitement to move the business forward. This brings up an interesting question. What can I ask in my meeting to see how they handle talent and leadership development?
You could ask, how do you make sure the culture of a company you're buying is a good fit? And what do you do to create a high-performing, adaptable culture in your portfolio companies, especially the ones that have gone through a carve-out?
That's a great question. It gets at their values, and if they understand the human side of success, remember, this meeting is as much about them checking you out as it is about you checking them out.
Right.
By asking smart questions about talent, leadership, and culture, you're showing them that you get it. You understand more than just the numbers.
Exactly. You're showing them you're not just looking at the balance sheet, you're looking at the people behind it.
Right.
And that you understand that people are the ones who make a business successful.
This has been a really insightful deep dive.
Yeah.
We've explored the market trends, the strategic changes, the technology disruptions, and the often forgotten human element of private equity.
Right. It's a lot.
I feel so much more prepared for my meeting.
Good.
Not just in terms of what to ask, but in how to evaluate these firms and their potential for long-term success.
We're glad to hear that. Remember, the private equity world is always changing the things we talked about today. Give you a framework for understanding this complex world.
Right.
But you should never stop learning and exploring. Stay curious, keep asking questions, and keep digging deeper.
Thank you for joining us on this deep dive into the world of private equity. We hope you found it helpful and empowering.
Until next time, keep diving deep.